how can you make money in a market that is going down? Today, I want to show you 2 strategies on how to do this. The first strategy is shorting a stock. So what does this mean and how does it work? Well, it means that you can sell a stock right now, even if you don't own it, and then buy it back later at a cheaper price. So let me explain to you exactly how this works. On the one side here, we have your broker. This is your broker. Don't make fun of my drawing here. Then right here, we have you who wants to participate and make money in a falling market. So, and then we have some other traders here. Now, here's what I want to use. I want to use Apple as an example. And we want to say, you know what? We believe that Apple actually from right now, it is at 119.52. We believe that Apple actually might go down again to 110. And now I want to show you how you can make money betting against Apple, betting on a falling market here. So here's how it works. Now you want to sell Apple, but you don't have it just yet. So what you would do is you borrow shares from your broker. So your broker is actually lending you 100 shares of Apple. Let's just say we want to use 100 shares. Now, the price at this point doesn't matter. He's just giving you the shares and says, okay, you need to give me back these shares later on. And he is actually reserving some money from your trading account to make sure that you really give it back to him. Now you have 100 shares and you can do with these 100 shares pretty much whatever you want. So in this example, you would sell them to trader 1. So you sell Apple 100 shares of them at the current price of $119. So because you believe that Apple will go down. So how exactly do you make money? Well, this is where we bring in trader 2. And let's say after a few days, Apple in fact is dropping down to 110. And here's what happens now. Now you are buying back Apple at 110. So how much money do you make? If you sold Apple for 119 and you're now buying it back, you're making $9 per share and you have traded 100 shares. So this means that you're making $900. Now you have the shares back, and now of course you have to give them back to the broker. See, because the broker lended you the shares. You could borrow it from the broker. So you have to give it back to him, 100 shares of Apple, and the broker is releasing the money that he held kind of in escrow, if you want, to make sure that you are getting the money back. Is this making sense? Now, the beautiful thing is this is all going on in the background. So if you have a trading platform, I want to show you right now how this looks on a trading platform. So I'm going to bring up my trading platform here. And let's just say that right now I wanted to trade Apple and I want to just sell 100 shares of Apple. So all I do here is, you see, it says already short minus 100. And I would sell them at the current price of $119.35. So I click review and send, and you see that right now the broker is requesting almost $6,000 from me. And these $6,000 is basically the money that he's holding in escrow to say, all right, Markus, you have to give me back the shares. And it is that easy. And now, as you can see, if you click on send order, I would sell the shares. Now, this here, what you're seeing is a live account. So I'm not doing it right now because I'm actually bullish on Apple. But I just wanted to use this as an example because many of you know Apple as a stock. Anyhow, this is the first way, because I told you that I give you 2 strategies of how to benefit from a falling market. So this was strategy number 1, shorting a stock. Now, let's move on to strategy number 2. You would buy a put option. Put means that you have the right to sell a stock at the strike price. My handwriting is atrocious, I know, but you get the idea here, right? So again, example, right now we want to bet on a falling market for Apple. And we already know, that's what we just said, that Apple right now is trading at around $119, and we believe that Apple will go down to $110. Now let me show you exactly how this would work, and we're jumping back to my trading platform here. So this is where we are looking at an Apple put. Let's say here Apple put of 119, and you can see it is trading at around $1.80. So here is what exactly we would do. We would buy a put for $1.80. Now, this put gives us the right to sell Apple for $119. Now, if Apple really goes all the way down to $100, see, same deal here, we actually would make $9 per stock. However, we have to deduct the premium that we paid for the option, which is $1.80. So this means here we are making $7.20 per share. And again, if we would trade one option controls 100 shares, this means that we are making $720. Now, the main difference between these two strategies is that for strategy number 2, buying a put, you need much less money. Remember when I went to my trading platform earlier and wanted to sell Apple 100 shares, that my broker was reserving around $6,000 in my account? Now, take a look at this. If I want to buy this option, so I want to buy this option and I'm clicking on review and send, it would only cost me $180. So as you can see, huge difference. In the one case, the broker is reserving $6,000, right? And you can possibly make, as you can see here, $900. For strategy 2, buying a put, your broker is only requesting $180, and that is also the maximum amount that you can lose. And you can make possibly $720 here. So this is how you can make money in a falling market. Now, very important. Strategy number 1, where you're just shorting the stock and where the broker is lending you the stock, you cannot do that in a retirement account. But strategy number 2, which we have right here, buying a put, this is what you can do in a retirement account. And you can do this for any stock. Now, you might actually be bullish on Apple, and I am bullish on Apple right now. But if you look at some other stocks right now that are in a downtrend, for example, Zoom, if you say, oh my gosh, Zoom is crazy during the pandemic here, it went from what, $50 to $500, and you think this is absolute overvalued, and I believe that Zoom will go down to $300, you can use this strategy or one of these strategies for Zoom. Or for example, for Peloton, if you think that Peloton right now is overrated, or maybe you're bearish on Etsy, so you see that all these stocks that during the pandemic benefited a lot, that they might actually move lower. This is how you can make money in a falling market. So now you know 2 strategies, how to make money in a falling market, how to bet on a stock that is going down. Let me ask you this, was this helpful at all? Because if it was and you enjoyed this video, do me a favor and click on like, because this way more people will see it. And if you enjoyed this video and want to see more videos like this, click on subscribe and hit the little bell, because this way you get notified whenever I release a new video. Also, feel free to share this video on Facebook, on Twitter, or by email, and I will see you in the next video.